So, my name's Carlos. We're with the Robinhood Stock Market Watchlist Facebook group, and today we're going to go over the laws of trading. This is an example for trading. Though rules are really for every type of investor and trader, no matter if you're a long-term investor, short-term investor, if you swing trade, day trade, it doesn't matter. If you're in the game, you have to have rules. You have to have some kind of rules, and these are kind of like a fundamentals for all of those types of investors and traders. And the first rule is always have some kind of limitation on volume. Don't just go willy-nilly and start picking things that really don't have any volume. Now, I've seen stocks that have an average daily volume of 1,000, which is crazy. We really want to look for things that are volatile or things that have a good movement, and that usually results in volume. Now, you may have maybe some ideas of maybe a particular stock, especially like a biopharmaceutical stock that may be working on some kind of drug cancer treatment and doesn't really have any volume, but you know that the FDA is maybe going to provide some good news pretty soon. That may be an exception, but for the most part, for the majority, always have some kind of limitation on volume. In this example, it's 1 million average daily volume. Same thing with stock options. Have some kind of average daily volume. It could be 1,000, it could be 10,000. Just have something. Don't go for a stock option that has 0 or 10 or 20 options. That means nobody wants it. And if you're looking into a stock option that really doesn't have any open interest or volume, it's going to depreciate like a lot more than any other option. Also, have a price limit, a limitation on a stock or a stock option. It's usually recommended to keep your share at least $1 or more. If it's under $1, the stock or the share is in jeopardy of getting penalized, and it could get it could go through a reverse split, or it could get delisted. Either way, that's not good, and it just helps buy the company time to figure something out. And in the meantime, they're losing value. You're going to be losing value if you're holding. Also look for a percentage change, and that could be within a certain time frame, like the last 5 minutes, or maybe a daily graph or something. It just depends on your strategy and your of what type of investor and trader that you're looking for. But that usually results in a trending direction, like it's been going up 10% for the last a certain amount of time. Then it could keep going up, and this is what we're going to see a lot of as we're entering the bull season, which we're going to talk about here in just a little bit. So number 2, day trade only, no swing trading. As this particular rule for the laws of day trading just means that when you're not really holding anything, you're just watching to see what the day is going to be like. You can kind of see certain algorithms based on moving averages and patterns. So that way you can kind of get in, get out within a certain amount of time. It could be within seconds or minutes or hours. And so a lot of times people struggle with swing trading. In the last 6 months, we've been in a very volatile bear market, and I've been really, really focused on straddling, trying to promote the straddling, because you have your calls and your puts all at the same time. And that's what straddling and strangling is. And I always say you can only lose what you have in one hand, but your gains in the other hand are potentially unlimited. So if you have an equal dollar amount in the two, in worst case scenario, if you lose a lot on one, most likely you're going to gain a lot on the other hand. Like I said, you can only lose 100% on one, but your gains, you can gain 200%. You can gain even 500%. There's some of you guys that even gain 4,000%. I'll be able to show you how we can kind of do that if you don't know already. Using information of what's going to happen before it's going to happen. Type of strategies. And so but And that's where swing trading really becomes highly effective when we're straddling, because if we don't always know what the next day is going to be like, or if we know it's going to be really manipulative, like it could go either way, or maybe there's going to be a lot of mixed signals. Sometimes when you straddle, you can buy before closing, you can sell the next day, and it doesn't have to be at the same time. You can sell at different times. That way you can maximize your gain on one end and minimize your losses on the other end. And sometimes you can turn that loss into a gain, so you're gaining on both ends, just depending on the volatility. And so rule number 3, it says trade stocks with news, press release, etc. Something that's going to cause a lot of volatility. We have so we're kind of done with the Amazon thing now with the split. As I had mentioned previously, we're going to see a lot of bearish characteristics, typically after 2 weeks after a split. And we went through this with Tesla, Apple. Now we went through this with Amazon. Next is there's the Shopify, and then Google. So now a lot of people are going to be focusing on calls on Shopify until they do the split. I highly recommend do not hold anything through the split, and that both goes for calls and puts. Both of them will get what's called an IV crush, or also known as an implied volatility crush. It'll devalue both ends regardless of what's going on, and you just do not want to hold on that. However, you want to buy on that after the fact that it's been devalued, and so that way you can then ride the wave down. And focusing primarily on puts, because after the split there's just a lot of selling activity until the first 2 weeks, and then once we ride the wave down using puts, we'll start getting maybe calls after 2 weeks, and then we'll start focusing on the Google split, buying calls on that one. So rule number 5 says enter at midpoint of support and resistance. And this is where the moving averages can really provide that information, as well as providing your buying and selling signals. That is something we've talked a lot about in the past, which is critical, because moving averages helps provide you your intelligent buying and selling decisions. It's like your assistant that's telling you, when to get in, when to get out. If we're just relying on the Robinhood application, that's like working with one hand. Your productivity is going to be a lot less than it would be if you had two hands, meaning where you can utilize the Robinhood application to execute your orders, but you can utilize another program that provides you more valuable, detailed information, buying and selling information. So you got to use, like I use Robinhood and Webull, so that way you kind of utilize the two programs to make one highly effective system. Rule number 6, always do a limit buy and a limit sell. Now, if you're buying shares, most programs are going to do a market buy and a market sell. And that basically tells the system to buy at any price or to sell at any price, even if it's at a higher price than you anticipated or a lower price than you wanted to sell at. If you do a limit buy or limit sell, you're telling the system that I want to buy at this price and no higher, whichever is in your favor. If you're doing a limit sell, you're telling the system to sell at this price or higher, whichever is in your favor, and not to be any lower. So that way you're not losing any money, though your order might not execute, and especially depending on what you're doing. If you're trying to execute it immediately while using your limit buy and limit sell, you may have to go in there and readjust or modify your price until it does execute. The best way to try to avoid having to go back in there and replace it or modify it is when you're doing a limit buy, set the price maybe a couple pennies higher than you normally would, and that'll increase the odds of that it'll execute the first time. If you do a limit sell, put the price maybe a couple pennies lower, and that'll increase the odds that they'll execute immediately rather than later. Because if you're waiting on it, that might not, time is not in your favor. The stock market is very time sensitive, and usually when we need things executed, we need to execute them now. And so rule number 7 is always use the ABCD pattern, enter at the C point. And I don't have the chart on me right now, but basically that's telling us to really kind of, for the safest play, wait for 1 hour after the stock market opens. There's the most volatility is in the first hour and the last hour of the day of the stock market. And so there's a lot of volatility, and a lot of times that's within that time frame where the stock market is trying to pick its direction, or maybe it's just going to be flat or whatever. But it's basically saying, if you kind of wait for that first hour and kind of see, which direction it's going to go, you kind of enter at a certain point and then ride that wave up or down. Depends on what direction you're betting on. Rule number 8 says sell 50% of your position at a target goal. Now, as a day trader gets all the way out. They don't really hold anything, as you can see, number 2. But I do see this particular type of strategy for long-term investors that may invest a certain dollar amount in a stock, and then as it appreciates over time, after a certain amount of time, could be a year or 2 years, they may withdraw or sell a certain position of the certain amount of dollar amount that they put into it. So that way they feel whatever's left in there is like free money, and they'll just hold on to it, and they'll use that money and invest it into something else. That's just their thing, and it works for them. And then rule number 9 is to beware of false breakouts. Sell right below the support. And false breakouts can happen from manipulation or news, but it also, most of the time, it's due to maybe improper settings on your moving averages. Because if your moving averages is providing you too many buying and selling decisions, then it's probably providing you false signals, because it's not really picking a direction. It may be going flat and whatnot. So you may have to adjust your timing or the type of moving averages, so that way it's not providing you as many signals. And what signals it does provide you is providing you more of a solid direction. And then sell right below the support. So rule number 10 says cut losses. Basically, always have some kind of stop loss. Don't just hold and hope that things are going to get better. You have to have some kind of system. This is always something that we've talked about, with moving averages and the differences between an amateur trader and a professional trader. But always ride winners, at least a certain amount, could be 5, 10, 20%, or basically until the system tells otherwise on when to sell. So this is kind of the basics of having rules that I highly recommend that you implement if you don't have it already. So there's just a lot of things that are scheduled to happen this week, and one of the best ways to really look into that is to look at the economic reports first, because the economic reports have one of the biggest impacts to the stock market, next to other world news like wars and invasions and things like that. But after a while, that news becomes kind of old, and the market, Wall Street, tries to focus on other things. And so the best website that I've been able to find to pull economic reports is investing.com. And if you're looking on the website, you'll find the link right here, economic calendar, or you can also download investing.com to your phone or tablet from your app store. And when you're looking on your app store, there should be on the bottom middle area a little calendar. You need to click on that. You'll be able to change it between earnings calendar, economic calendar, holiday, and so on. But you'll want to select the economic calendar. So once you have that selected, this is, like I said, very, very important. And your average Joe, or even your financial advisor, is not even going to go through this. They don't even really go through this. But it is so vitally important and valuable that we look at this stuff on a daily basis, because it helps provide us of what's going to happen before it's going to happen. Rather than just kind of waiting and seeing and then have the news provide you, that's not good. Moto, nice puppy. So when we're on this page, we need to click on filters. If you're on the mobile application, it's a little funnel icon you'll have to click on. we need to clear everything. There's only two things that we need to see, and that's we put a check mark under the United States, and then under importance, we have a 1 star, 2 stars, and a 3 stars. We want to put a check mark under 3 stars because we're telling the system we want to pull everything that'll have the biggest impact on the United States stock market. So once you click apply, if you're doing it on your mobile application or your tablet, it's going to save the settings. If you're doing it on the website, it's not going to save them. Then you want to click on this week. That way we can pull all the most important economic data for this week. And so we have Monday, Tuesday, Wednesday, Thursday, Friday. Now we're not always going to see this much activity. Sometimes we may see more, sometimes we may see a little less, like maybe 2 or 3 days, but it looks like we have a decent week of economic reports, 4 days. And so Tuesday, so looking at the time first, so we're looking on the website, it's going to default to the Eastern time zone. So if you're in a different time zone, you have to do a little math and kind of figure out what time that'll mean for yourself. If you're looking on your phone or your tablet, it's going to be based on your time zone. So that way you don't have to do the math so much. So with the Eastern time zone, the stock market opens at 9:30 a.m. So going to Tuesday, tomorrow morning, is existing home sales for the month of May. This is basically the used homes, so which holds the majority. That's going to be the majority. I mean, look, we have 5 million versus new home sales. Those are brand new homes that have been built, ready for sale, that have been sold. So that's just a little bit of a fraction of the existing home sales. And so for the month of May, now we know that the government's been increasing interest rates and stuff, and previously before that, people were trying to rush into buying their home and to refinance their home before the interest rates got up. Now there are some astronomical, high interest rates, and so these sales, both new and used, are going to be coming down quite a bit, month over month, and so. If you don't know about these reports, you can click on them. Feel free to click on it. A new little tab will appear, or on your app, a little paragraph will appear, and it's just a very small amount. It'll describe what the economic report is right there and how it will affect the stock market. And so, for example, existing home sales measures the change in the annualized number of existing residential buildings that were sold during the previous month. This report helps to gauge the strength of the United States housing market and is a key indicator of overall economic strength. That's huge. The key indicator of overall economic strength. This is a major report. Now, if we're looking at like a yearly report, that's huge, that's major. If we're doing it like a quarterly report, that's another big one. A monthly report is also another big one versus like a weekly report or something like that. So the more rare the report is, the more of an effect it'll have on the stock market. So we have a monthly report. So a higher than expected reading should be taken as a positive or bullish for the US dollar or stock market, while a lower than expected reading should be taken as a negative or a bearish for the US dollar or the stock market. And so let's go back. We have right here existing home sales for the month of May. Now the previous report for the month of April came back, I believe, a little lower, 5.61 million, and now it's forecast to be at 5.39 million. So the forecast is huge. When we're looking at this, the system is basically telling you that it's most likely not going to be as much as the previous one. And so if it's not going to be the previous, that's not good. That because month over month it's doing the same thing. It's declining. It's showing a small decline in growth in the economy, and that's not good. That's going to provide bearish characteristics. And so the forecast is right here. Now, if it can meet or beat that, like in between, we might be fine, or maybe it'll just range, or but if it's going to be lower than this, we could easily see some bearish characteristics. Now, the U.S. futures may be green right now, and they may be green until opening. Because this economic report comes out 30 minutes after the stock market opens. So after the stock market opens, most likely the stock is going to start to come down. It'll probably zero out. It's probably going to wait until this report comes out. And depending on if this is going to be a negative report or a positive report, the stock market will most likely pick the direction based on of what's going on here. Now, since we went over the rules, right around that time is that ABCD pattern, buy at the C point. So this basically is going to be released at that C point that we were talking about within the rules. And so it's very interesting how these economic reports are out on a specific time, because it helps manipulate the stock market. It helps provide us a plan to trade. That way we can trade our plan. So on Wednesday, we have the federal chair, Jerome Powell, is going to talk right at opening, which is we don't usually see that. Usually he'll talk maybe before opening or after opening, but right at opening, this may be a little different. And so we'll just kind of have to really see. I would say either way, it's going to be very volatile, but volatility is key to straddling, because if we're straddling both calls and puts, we're betting that the stock market goes up and betting the stock market goes down at the same time. As long as it picks a direction and goes that direction, it'll become profitable, because your gains in one hand will outweigh your losses in the other hand. And so that's why straddling can be very, very beneficial if it's done, accordingly. And so on Thursday, we have the initial jobless claims. That's the unemployment report. So that report is scheduled to be released 1 hour before the stock market opens. So that's going to create some nice volatility early in the morning. Now, the unemployment report last week was up to 229,000, which is high. It's going up, and compared to its lows, it's probably up 15%. And so typically when we see a big surge in either that or our crude oil inventory levels, we usually see kind of a little bit of a decline the next week. Now, most reports, we need the numbers up. Up is good, but there's two reports, such as the unemployment report and the crude oil inventory levels. We need those numbers down. If the less number that they are, the more positive or bullish that it'll be. So if the unemployment was up last week, which was bearish, it'll most likely be down this week, which will be bullish. Same thing for the crude oil inventory levels. So they were up last week, almost 2 million barrels, which is not good. People are struggling, with buying fuel, as they are, $6, $7, $8 a gallon, or whatever that they are across the country. What we're seeing is that most Americans are getting paid every 2 weeks with their job. And so when they get paid, what we're seeing is that they're filling up their vehicle and trying to make it last for 2 weeks. And so what we're seeing is 1 week we're seeing the oil inventory levels down by a lot, and then the next week they're up by a lot, where normally they're pretty even. And well, before Russia invaded Ukraine and the oil stocks were manipulated and whatnot, these numbers were down. They were in the negatives, which is what we want. We want them in the negative 1 million, negative 2 million. That provides bullish characteristics. But now they're starting to get up there. But it's more than likely that the unemployment report and the crude oil inventory levels will provide those bullish characteristics. That they'll be down a lot more, which is good. But then we're going to have the federal Jerome Powell speak again. Looks like about 30 minutes after the stock market opens. And then after that, we have 1 more hour after Jerome speaks, where we get the crude oil inventory report. So there's just a lot of volatility, a lot of momentum, keeping Thursday very, very volatile. We're going to see a lot of volume on Thursday, but I would say we should see some pretty good bullish activity on Thursday. So Friday, again, new home sales, it's not looking good. And so overall, so Tuesday morning, I would say we'll probably open in the green, just by looking at this, we'll probably open in the green and may end in the, or close in the red. And then so Wednesday, I'd say it's mixed because it just really depends on what Jerome Powell says, and it depends on how the system digests that information, and whatever direction that they picked, the rest of the financial institutions will kind of follow. And that's why one of the pros say always follow the money. And so so going into Thursday definitely looks bullish. So yeah, Thursday looks really good. It should open in the green, should close in the green, and then Friday will most likely open in the red and probably close in the red. So a lot of mixed signals and stuff here, but I do want to pull up another thing that I posted not too long ago. Let me get out of here. So all my posts I always save in the featured area. When I built this group several years ago, it was for I posted my stuff in the featured area. It was kind of my bookmarks. And so one thing I wanted to go over is the seasons of the stock market. Now the stock market has a yearly cycle, but it also has a 10-year cycle. Cryptocurrency has a 4-year cycle, which we could always get into later. But with the stock market cycle, the yearly cycle, we have our bullish season and we have a bearish season. Now, the bullish season and bearish season can typically last between 3 to 6 months, and it's been about 6 months. And so I've posted this information here for your reference if you ever want to kind of look at what to expect in each season. And so just kind of highlighting right here is the summer season. And so which is the bullish season, or the third quarter, which starts tomorrow. June 21st through September 22nd is the summer season, which is also our bullish season. After several months of the market trying to recover, comes the summer, the strongest part of the bull market. This is when the media begins to recognize stocks as once again quality investments. Blue chips perform quite strongly in this period. New emerging industry tends to spring up during these periods, even rise to bubble levels such as tech or biopharmaceuticals and or the food industry and so on, and especially in most recent bull seasons. Investing during this time mostly requires going along for the ride, because most of the time everything just goes up. You can't just buy any stock and expect it to go up like you would have been able to previously, but you can feel confident that many stocks will continue to rise for a short or even a medium term. And so, but it's really wise if you're a new investor or trader, that it's very important to be familiar with these seasons and how to be prepared for them, because your strategy needs to change unless you're doing straddling. That's the nice thing with straddling both calls and puts, because it doesn't matter if the stock market goes down or up. It can be very, very profitable in either direction. But if you're always picking one direction, you have to change your strategy a little bit, because each season has a different feel to it, a different algorithm. And so you will see that as we start getting more into the summer season. And the Wall Street knows this. All the long-term investors and all the hedge fund companies, they know this. And what happens is, during a bearish season, these guys will make a bearish season more bearish. Or if it's a bull season, they'll make a bull season more bullish. And so it's just, the manipulation is just another part of the game. You just have to realize that it's there, and you have to try to identify it, and that and to go along with it, because as it says, you just ride the wave. And so we can always look into that more, especially if you guys have any questions about that. That's always important. But the next important thing, though, is the earnings, because there's a lot of good earnings that are going to create a lot of volatility. Now, I always post every Saturday the scheduled earnings report for this coming week, which is going to be light because we're at the end of this season. We're at the end of this second quarter, and so this is all going to reset next month, and so we're just kind of at the tail end. And so that's why the list is a little light, but there's a lot of great opportunities here. So first one in the morning, some really big ones is going to be Lennar. Lennar is I think they build brand new homes and stuff. And as we're talking about the new home sales reports, it's going to be down. So it's not really looking well for Lennar being in that industry here going forward for the next year and a half. Lazy Boy, then we got Winnebago, KB Home, but the big ones are going to be on Thursday. Accenture is going to be another big one, like Rite Aid, Garden restaurants like Red Lobster or Olive Garden. That's a big favorite. With the rise in fuel costs and inflation, are people still going to the restaurants? We'll see. And keep in mind that these not economic reports, but these earnings reports, even though we're in the second quarter, are still based on the first quarter earnings. And so, we're just not quite there yet where the fuel had probably a big impact on that stuff yet. View is a new company that does like windows that like for their buildings, kind of like your glasses that if they get exposed to like sun, they'll automatically dim. Like it's an automatic window tinting. Plus, I think they do windows with like built-in LCD or like TV, stuff, animation, for businesses and stuff. So it's very interesting technology. They may be ahead of their time, but it's, there may be a lot of growth there. FedEx after close on Thursday. There's going to be a lot of eyes on that one, as well as BlackBerry. Smith and Wesson. My goodness. I mean, if you guys don't know Smith and Wesson, they make firearms, weapons and stuff, not just for consumers, but also the police departments and all that, squats and SWAT teams and whatnot, and the firearms has been a big subject in the last several months. Even though again these are first quarter stuff, but there could be a lot of investors may think of the future, in the near future, especially this quarter, and so there's just gonna be a lot of volatility with this, and any time that we have firearms that become a big issue across the nation, especially when you have politicians that want to create more gun laws, people buy guns and ammo like it's a Black Friday, and the sales have gone through the roof on every single brand. And so it's going to be crazy of what's going to happen. It's going to be volatile. Just know that everyone's going to be watching that one. Now, Friday before close, we have the Carnival, the Carnival Corporation. They do the cruise ships. And then CarMax is another one. So this is always a good, calendar kind of look at, every weekend. That way we can kind of plan ahead. Now, out of these top 10, I do post the analysis on the, and this is extremely valuable information at your fingertips. Now, Carnival Cruise, of course, like we mentioned, they're scheduled to report Friday morning before the stock market opens. Now, Carnival's earnings release has around a 64% expecting an earnings beat, which is about average. Average is around that 65, 67-ish. Any lower than that would be considered below average. Any higher than that would be considered above average. So that's average. However, option traders are pricing in around 14% movement, price movement in either direction, where normally it doesn't move that much. It moves around, 3%, maybe 4%. But there's a lot, and prior to this, we've talked about this, in the last 2 weeks in our chat room, in our Facebook group. There's been a lot of weird options activity going on with Carnival. I can't remember if it was calls or puts or maybe a straddle, but we could try to take a look at this here in a few minutes. But very valuable. I mean, Carnival is going to be a good mover, and even though we're going to try to play it safe, especially with these big movers, we can straddle them. We can buy both calls and puts, especially if we know it's going to be a big mover. But when we're doing earnings or something like something big like this, we have to be aware that of the IV crush, or the implied volatility crush, could possibly devalue both calls and puts. So if it doesn't move very much, let's say you do a straddle and it only does move 2 or 3%, that might not be enough to provide enough profit. It could be a wash, or if it kind of zeroes out your the implied volatility crush may devalue both sides, and it may be. That's why you never want to go heavy on it. The earnings is kind of a lottery play. If most of the time it should do pretty well, but there are going to be some occasions where it might not do very well because maybe there's some weird glitch or something. Like you may have seen in the past where earnings were accidentally reported before the or the afternoon closing earnings were reported accidentally before it closed, and so that just creates this weird little glitch, and so I mean things are just so things can happen. You just got to be very careful, but your primary plays should be those stocks or stock options where you follow the money, where where you have the least amount of risk. And so where these could be a little bit more risky, but like I said, they're lottery plays where you put money into them, and in case things go south, that at least it's money that you're not going to be hurt about. So, but a lot of you guys, I've seen your posts where you've gained 4,000% because a stock moved 20%, and so 4,000% one day. And that's why it's called lottery plays, because you could end up winning big from a very small dollar amount. And so Carnival, that's a good one. FedEx is scheduled to release their earnings report Thursday after the stock market closes. So again, that's going to be a really, really good one. The company's earnings release has around a 50% expecting an earnings beat. Nobody knows which direction this is going to go. As the fuel prices have came up, FedEx may be trying to absorb some of this pain to avoid having the customer, feel it, trying to keep their costs competitive with their other competitors. And so, we just don't know. But either way, option traders are pricing in around a 7, maybe 8% price movement in either direction, where normally it's not that volatile. It normally moves, 4 or 5%. Next one is Lennar. As we were talking about, Lennar specializes in building new homes. And they're scheduled to release their earnings report tomorrow morning before the stock market opens. The company's earning release has around a 40% expecting an earnings beat, almost another 50-50. Just don't know. We're just waiting to see how the economy is going to affect this one. But either way, if it does good or bad, it's expected to move around 8%, in either direction. Going up here, we have the Accenture. Accenture is another big one that's going to create some good volatility on Thursday morning before the stock market opens. The company's earning release has around a 68% expecting an earnings beat, which is right around average. Option traders are pricing in around a 6% price movement, where in the past they've moved around 3 to 4%. Rite Aid is going to be another a big one. Now, Rite Aid in the past was like many other companies like Sears and whatnot that were on the verge of going bankrupt. And so, Rite Aid was too. I think they had applied for bankruptcy protection, and all of a sudden, in 2020, then the pandemic hit, and so on. Well, then the economy closed. Well, Rite Aid was one of those essential stores. Well, that helped Rite Aid as well as many other corporate stores, and so that made Rite Aid profitable again. Well, now economy is up and open, and inflation's up. Well, people are trying to be more budget cautious. They're going to Walmart or wherever that they can to find more cost-effective items. Rite Aid might not be so cost-effective, so Rite Aid is expected to release their earnings Thursday morning before the stock market opens. The company's earning release has a 32% expecting an earnings beat. That's not good. Now, what's the opposite of 32? Just reverse that, and that would give you 68% expecting an earnings miss. 68% chance this thing is going to go down. 32% chance it's going to go up. So, however, option traders are pricing in around a 20% price movement in either direction, and it can even be worse than that. This could be a 30% movement. I mean, who knows? I mean, this is huge. But the good thing is, now you know about it. Going up here, we have the Darden restaurants, and sometimes the pictures can say 1,000 words. In this case, we have 3: Red Lobster, Olive Garden, Longhorn, the Capital Chili's, the Bahama Breeze, and Seasons. Some of these restaurants are in my area, some of them are not. However, Darden restaurants are expected to release their earnings report on Thursday morning before the stock market opens. The company's earnings release has around a 31% expecting an earnings beat. That is terrible, and that is not good. So again, if you reverse that, you'll be able to see that it has a 69% expecting an earnings miss. Option traders, though, are pricing in around 8 to a 9% price movement in either direction, most likely down. Then we have CarMax. Now, the car business is very weird right now. We have a short supply and a high demand, and which results in a high turnover, just like anything else. And so, but the inventory levels are down. And if you're not a new car manufacturer, you can't sell new and used cars. We have CarMax that just sells used cars in big metropolitan cities that are having a hard time trying to get inventory, just like everybody else. And so CarMax is confirmed to release their earnings report on Friday morning before the stock market opens. The company's earnings release has a 20% expecting an earnings beat. That means they have an 80% chance of an earnings miss. That's the highest odds of any of the earnings report this week that's going to go down, or the lowest, however you want to look at it. It is not good for CarMax. Option traders are pricing in around an 8.7 price movement in either direction, and that's probably being conservative. Next one is BlackBerry. BlackBerry used to be known for selling cell phones. At one point in time, we probably all had one before the iPhone. Loved the keyboard and the little mouse thing. But since then, they just decided to focus more on cybersecurity. And cybersecurity has been definitely a huge concern and a growing demand worldwide. Though it's very competitive. There's a lot of competitors trying to do the same, and so BlackBerry is confirmed to release their earnings on Thursday evening after the stock market closes. The company earnings release has a 25% expecting an earnings beat. If we reverse that again, it's 75% expecting an earnings miss. Most likely, BlackBerry is going to go down, and option traders are pricing in around a 13% price movement in either direction. And again, most likely, this thing's going down. But again, it can be highly manipulated. So Smith & Wesson, that's another really, really highly valuable stock that is going to get a lot of attention this week because, again, with the whole gun violence and the gun laws and stuff that the politicians want to make and whatnot. And as to kind of get off topic, the gun laws aren't really, I mean, yeah, we need, regulations and laws in place, but ultimately, if the main cause for a lot of this, a lot of these violence is the high price of everything, as well as the lack of high quality education. If the government can increase the quality of education and lower the cost of living, it'll just naturally lower crime. I'm not saying it's going to remove it altogether, but it will naturally lower it, because when you increase your quality in education, people are just, they're smarter than that. They know better. And so, and then the cost of living lowers people's stress levels. So, but either way, Smith & Wesson Brands is confirmed to release their earnings report on Thursday after the stock market closes. We were looking at that in the schedule. However, the company's earnings release was around a 64% expecting an earnings beat. So that's average, like I had mentioned. Again, these earnings are based on the first quarter, so it should be average, even though the sales and stuff that have recently skyrocketed since we've had all these, the media news and whatnot. I believe that the option traders are pricing in around a 23% price movement is because they want to start buying, because the stock most likely is going to go up because of the news of all of these recent sales of these going up. And we'll just have to kind of watch it and see. But like I said, it's going to be very, very volatile, where previously it usually moves around 10, maybe 12, 13%. At best. Normally it maybe moves like 5% after earnings, but like I said, there's a lot of extra volume, a lot of extra attention, a lot of extra news that's going to go into this because of what's been going on. And so View is right here. View is, like I said, one of the newer listed companies that builds a lot of these cool windows. And but they're confirmed to release their earnings report on Thursday morning before the stock market opens. However, the company's earnings release has around 36% expecting an earnings beat, which is not good. But time will tell. This is, like I said, a baby company, and we need them to grow. But with the way that the cost of things have been, businesses are probably going to want to save money and not get so much of an expensive cool window. But however, on last Friday, there was a very notable large amount of calls at $2.50 that expire August 19th. So and we'll take a look at some of these options activity. And so one of the best sources for options information is on a website called barchart.com. If you go to barchart.com, you can load that on your phone, or if you do, it's a little menu icon on the top right if you're on your laptop or desktop. You just click on the options tab, and that'll pull down your options menu. The first thing that we need to look at is most active options. Now, when we're looking at this on a weekend, it's going to basically provide us the information from the last closing day, which would be Friday. And so, but when we're looking at it when the stock market is open, all this information will be live. It'll all be moving. Now, you may need to click refresh probably once every 15 minutes. That way the order will then change, because you may see something on the bottom of the list that's trickling up on the top of the list. I call that flying under the radar. You have to identify it. Because when you're looking at this regularly on a daily basis, there are certain stocks that are on here all the time because they are the favorite stocks for pro traders to day trade and to swing trade and to straddle. Again, we say follow the money. And Apple is always on the top of the list right now. They're at 1.6 million in options volume. We have about, out of that amount of volume, about 51% are betting the stock's going to go up. Throughout probably that day, as well as the next trading day, which would be tomorrow morning. Then we have almost 49% people are betting against the stock, betting it's going to go down, but it can also provide you a good indication of what investors feel that the next day is going to be like. The higher the percentage of calls, which is a more These guys are more optimistic because they're betting. You follow the money. You see where people are betting. Are they betting the stock is going to go up? Are they betting it's going to go down? And so we can sometimes find some unusual activity if there's a certain percentage that is way above average, because just like the earnings percentages, usually 65% is average. If we see 50-50, that's a little bit of a concern that most investors just don't know what the next day is going to be like. But like I said, we can sometimes tell by looking at the economic reports. But Tesla is always number 2. Both of them are very favorable for day trading, swing trading, and the straddling. Tesla's more on the premium side because the Tesla's more expensive. Not everybody can afford maybe a couple $1,000s per contract, where Apple can be $100 or a couple $100 or $300 per contract. Just depends on the time and your strike price. Amazon kind of came in the mix ever since it did the split. Amazon never was really on the list. If it was on the bottom of the list up until it got a lot of attention. But now it's on the top of the list. It's number 3 now, and it's been consistent. So, however, out of these, Amazon still depreciates a lot. So I'm not sold on its stock options because the time decay is very rapid in Amazon. So it's just best to stick with Apple and Tesla for now. But Alibaba is number 4. It fluctuates. A lot of these Chinese stocks will fluctuate. But like I said, a lot of them you'll see kind of come and go. But ExxonMobil is not normally on the list, but because oil had plunged last week, you see a lot of people doing some straddling. And so we have a good 50-50 mix, going into tomorrow, Tuesday. The stock may bounce 2, 3, 4, 5%. And at a certain point, usually if you're straddling, when a stock usually goes past 1% in either direction, that's kind of the profit zone. If it's within the 1%, it could be a wash throughout that, but once it kind of passes that, that's good. You are doing really, really good. And sometimes when you're looking at good volatility, you can kind of base maybe your level in of calls and puts based off of maybe this information. Like, for example, NEO right before close, it hit 8%. Maybe you can go 72 or like 60% calls, 40% puts. Where you go a little more heavier on the calls, maybe not so heavy on the puts. Or vice versa if you think it's gonna. You don't want to go past 60-40. It's recommended just to stay 50-50 because you may be leaving some money on the table. So going down the list, American Airlines, so on. But like I said, it's just good to kind of look at this information regularly. The other page under options that's really, really important is your option volume leaders. Now, even though the most active options summarizes the entire options system, the options volume leaders provides us the most active individual calls and puts, automatically sorted out by options volume. And volume is always the current day's buying and selling activity, where open interest is the total number of open option contracts that have been traded but not yet liquidated via offsetting trades. So these are like people holding, so you can kind of see the desirability in this stock and stock option, but you can still utilize this information for buying shares. Even if you're not into options, that's fine, but you can still use this information for buying shares. That way what are people betting on? Are they betting it's going to go up? Are they betting it's going to go down? And usually if you're doing volume, it's usually in a short period of time. The DTE, which is very important to look at, is the number of days until that option expires. You can look at the date, but the time also, or the day, the DTE gives you a good time frame as well as what investors are betting on and when they believe it may reach that at that point. So the first one was Ford Motor Company with 85,000 in options volume. Totally dominated the entire options system by twice as much, over twice as much. And with an open interest of hardly anything, now it had a lot of volume, which the next trading day, this volume will kind of merge into the open interest, because then volume resets itself back to zero every day. It starts over, but the open interest begins to accumulate all those people that are holding. So that's information you don't see when you're looking at regular shares. All you see is, what people are buying, or whether they're buying or they're selling today. And so you're really missing out on a lot of information if you're not utilizing this. Now, going down, we have Apple put right there. We have an Apple call. So we see that there may be some straddling or strangling. Now, the difference between straddling and strangling is, well, they're essentially the same. Straddling is where you're picking the same strike price, where strangling is where you pick different strike prices. For example, so you can see where Apple's right around, right in the middle. Let's say it's 132.5 or whatever. So you're right in the middle. So you can pick your 130 put and your 135 call, because maybe it's right in the middle. And it just depends on your strategy and everything. But it's always recommended, if you're straddling, try to stay at or around the money. Around the money meaning where it's feasible, where it can get to it within 1, 2, or 3%. Any more than that, it's going to struggle by providing you more time decay, and it's going to depreciate more the longer you hold it, and it's not doing anything. And so you don't want to put yourself in that position. But again, if we're looking at this list regularly every day, we'll find things that are not normally on this list. And that could be like another type of flying under the radar, where like, for example, plug. All of a sudden plug is third place on, or fourth place on the list, and it's not normally ever on this list. And if it is, it's usually on the bottom. So something's going on with plug, and it's currently at $15.83, but investors are betting against it. They're betting a $15 put strike price that expires in 28 days next month on July 15th. We can see that the open interest is 48,000, but the volume is around 34,000, which, so let's talk about that, because what we've seen, these are a little different. So if the open interest, if the amount of people were holding 48,000, what is to say that 34,000 sold? Maybe they're selling and getting ready to buy calls or something, or maybe they're selling, waiting to see what happens, versus the other one where 9,000 were holding, and now 85,000, which exceeds the amount of the open interest. This volume, 85 on Ford Motor Company, is showing pure buying activity. And not to be confused, but like I said, pure buying activity. They're betting Ford's going to, probably still keep going down on that day, Friday, and most likely on Tuesday, tomorrow morning. And so, but that's why it's really you got to be very careful when you're looking at the volume and the open interest. That way, it may provide you that information and not wrong information. So here's another one here. We have an Apple call, $135 one. We have two of them right here with that expires in a week and 2 weeks. But you see that this open interest was really nothing, 9,000 and now 32,000 in volume. So again, that's pure buying activity on calls on Apple. Then we have a put on AMD that expires in 63 days. That doesn't look good for AMD with a $75 strike price. You're holding. But then again, their open interest is 35,000, volume is 31. So it's just right around that. So again, we don't know if they're just selling the put and now getting ready for calls. As we had mentioned, we're going into the bull season. And a lot of times when I mention this to people on Facebook, like, yeah, right, everything's going down, there's a bull market and a bull season. The news and people look at the bull market when it indicates that it's a bull market. By that time, you've left some money on the table. The bull season is a season when we start to see more bullish characteristics in everything. So it makes it harder for the bearish characteristics to do its thing. And so even on a bearish day, it may turn out bullish, because the bullish characteristics in the next 3 months may overpower the bearish characteristics. So bring it on, bears. We have Apple, a couple more Apples. VST, I'm not familiar with that one. And again, that's not ever on this list. And that could be unusual activity. Because it's not on this list, there's something going on. We have 2 calls, because right now it's at $22.42. We have a $24 and a $25 strike price that expires in less than a month. And so this could be like a 10% gain, even if you buy it as shares, or it could be a substantial gain if you buy calls. And but we can see that that one has a very small amount of open interest and has a very large amount of volume, where the other ones are kind of the opposite. But again, this is really good information to look at. And there's another trick that we can utilize to look at more longer term stuff. Because volume, when it's sorted out by volume, that's more shorter term stuff, like 1 week, 2 weeks, or a month. Now, if we click on open interest, it's going to sort it out by open interest, but it's going to sort out only what's on the page, because Bar Chart would like you to, subscribe and to pay, for more features. But if you click on refresh on the page after you've clicked on open interest, it'll now automatically sort the whole entire system, now providing us everything with the highest open interest. And when you're looking at things with the highest open interest, as we again see, it's the total number of open contracts that have been traded but not yet liquidated, offering offset trades. Liquidated, meaning sold. People are holding on to this stuff because they believe that it's going to go in the direction that's in their favor. So AAL, that's American Airlines, right now has the highest open interest on puts, and have been for a while. As we've been doing these meetings and stuff months ago, we've been seeing American Airlines. It was at $18, it was at $17, $16, and so on. And here we are, just at $13, and now at a $10 put that expires at the end of the year. And so, and the volume just keeps growing. But then we have Ford Motor Company, which has been kind of going through some interesting, basically a roller coaster. They touched $25 a share right before Russia invaded Ukraine. And then everything kind of went, upside down. But we do see a lot of straddling for Ford Motor Company, which would not be a bad idea. As you can see, and follow the money, because that's what everybody else is doing for those long-term option traders. And so, but when we're looking at it as a stock option, if a lot of investors are betting that Ford Motor Company is going to get back up to $20 a share, it's at $11 a share now, you're buying your shares, that's almost 100% gain, 80-90%. And I can't remember if they've unsuspended paying dividends or not. But not only are you holding on to something that's appreciating, but they'll pay you a dividend every 3 months. And so they're just now delivering the Ford F-150 Lightning. I got to drive it last November or October as a nice little prototype, but we're starting to see some friends and members starting to receive their Lightnings, and so it's an amazing truck. And once it starts to get more out there, it's going to get more attention on the news and as well as the financial earnings and whatnot. They'll be able to manipulate their, even though they're not probably building as many, they manipulate their investors and their stock by the online orders. Even though they may not build them, those numbers help encourage investors to buy. So just know that there's a lot going on with Ford Motor Company. They got a lot more vehicles that they're going to be coming out with, a lot more factories that they're building. And so there's a lot of growth in Ford Motor Company. We can see that there's a lot of optimism there. Now, Teva, I think that's one of those pharmaceutical stocks. They're always a penny stock. They're always around that $10 range. So a put, I can't remember what CHPT is, ET, but I mean, these are all good ones. You can kind of look down yourself and kind of look. I look at another American Airlines, $5. As the fuel prices go up, we should start seeing fuel prices go down. As we saw the oil prices, plunge. But airlines still may struggle as maybe less people are flying, maybe they're driving more, just not traveling as much or staying local. We may see airlines maybe buying each other out. So this is going to be very interesting in the next year and a half. But yeah, you can always feel free to scroll down. We have Intel, and many others. Now also we can under the options area we can look at the straddling and strangle activity. Now one way to dissect this information, we want to look at all four of these screens. We have a short and a long straddle and a short and a long strangle. I don't know why they didn't pull anything up there. Let me see here. But the idea is, if we can get something, this may be saying this because maybe today, maybe the system thinks there's supposed to be activity today, but maybe it's not seeing any activity. But so when there's usually activity on here, we want to find multiple of the same stock options, because that's just showing a lot of unusual straddling activity. But for some reason, it's not showing any activity because, like I said, I think it's because today's a holiday and just maybe trying to pull something you can't find. There's another website if you're looking for most active calls and puts on a particular stock option. You can go to nasdaq.com and we can look at the options information right there. And we're using the option chain. And then on the bottom, you can look at the most active options. Then you have we're looking at Apple right here, our most active individual calls and puts. Now, some of these are expired as we're looking at them during the weekend. You can see that a lot of them expired worthless. They're 1 penny. NASDAQ, before they redesigned their website, they used to have the expiration date on here, but now you have to click on them, unfortunately, to get the expiration date. So now you can see that this one's expired. So when looking at the weekends, you have to try to avoid the ones that are expired and try to look at the ones that are not. Like the one, there's one for 44. It's a 131 call. We'll double check, see if it's expired. That one is expired. So you just want to kind of work your way down the list. Next one is this one at 108. This is a $135 call, which I believe is one of the ones we saw on the most active options list. And this is active because it expires on June 24th. And so you can start there and kind of work your way down. And look, you got 130, and then the 135 were the most active calls and puts for Apple. But this is just one way to get more in-depth information. Anybody have any questions or anything you wanted to go over?
Yeah. Can you hear me?
Yeah, I can hear you.
Okay. I've only watched the 2 videos that you sent me, and I was going to do the rest. But anyway, what would you set your EMA
at? Sure. Let's go over to. So I'm going to open up Webull. Now, Webull is another free desktop application you can download.
Yeah.
You don't even have to sign up for it. You don't have to sign in. It's just right there. Now, it all depends on your style of investing and trading. And so you have several different moving averages. Now, some moving averages may move slower than others. Some may move faster than others, meaning more reactive to the price changes. So if you're more of a long-term or short-term investor, you're not going to want the moving averages to be as reactive, because it may provide you too many signals, which may be called false signals. Because, as a long-term investor or short-term investor, you don't really want to sell unless you absolutely have to. You want to keep riding that wave and until you absolutely necessary. But in that case, again, you have to adjust your moving averages accordingly to that. But if you're more of a day trader or swing trader, you're going to want more of a more reactive moving averages. That way you can get in and out more timingly. And so one way to kind of configure that, so right now, where are we at here? Let's go to Apple. I'm going to go to the daily chart. And so on the desktop, or whether you're on the mobile application, you should see your moving average indicator somewhere. If you don't, on the mobile application, you may click somewhere on the top left area of the graph, and it may automatically pop up. When it does, you'll want to click on it under the little gearbox thing. That'll your indicator settings will appear. Now I use EMA because it's the exponential moving averages reacts the quickest to price changes, and so if it reacts the quickest, I can react along with it. That way, I can and if you're more of a long-term investor, you're going to want probably more of the regular moving average. The regular moving average is going to be a little more chill, and it's going to, it's not going to move as quick or as slow as maybe some of these other ones. And you may have to just kind of experiment with some of these other ones. But the MA and the EMA are the two most commonly used moving average indicators across the system. A lot of people may experiment with other ones just to try it out, but you always have your primary, then you have your subcharts, which you can have up to 6. The most common used subchart is going to be your MACD, which is on the bottom. Both of these two are the two most commonly used combined moving or charts that we utilize together. Anything else is just kind of optional. Some may use the RSI or some other things. But going back to our main chart, which is and the MACD are the two most important ones to use for right now. We have the length, and most stock market systems are going to default to default lengths. You have your 5, 10, 20, 30, and 60, and 120. Most new investors have no idea what that is, and for the longest time, I didn't either. And so, but every day, so you always got to learn. The more you learn, the more you learn. Always learn something every day until you run out. And so what these mean, so if we're looking at a daily graph, that means every notch, every bar is 1 day. So the length means 5 days moving average, or a 1 week moving average. 10 days is also 2 weeks, because there's 5 trading days per week. 20 days or 4 weeks, or 1 average. So when we're looking at the chart here, we have the main price right here, which is at $131. But we have 3 moving average price that are kind of following along with it, but it's because they're the 5 day, 10 and the 20 day. We have kind of a value on those as well. Now we can kind of look at this in several different ways, but also in another way that another analogy that may make a little better sense to most people's day-to-day lives is like the automotive industry. If you're looking to buy a car, sell a car, or to trade a car, most people always go to kellybluebook.com. They put their year, make, model in, their miles and their features, and boom, all of a sudden they have their excellent condition value, you have your good condition value, then you have your fair condition value. Now, as a seller, you always want to try to get the most that you can, the higher one, or even better yet, even higher than the excellent condition value. Or if you're a buyer, you want to try to buy low, and buy below its value. And so this can help give you those types of price values. Is it worth, buying into, especially with Apple right now, $131 a share, and we have these moving averages up to almost $141. This is a good buying price point. And so that you should feel kind of nice, warm and fuzzy. Now the other part is that we utilize these as a buying and selling signal. Now you can see that by utilizing a crossover, you can see the 3 moving average lines crossed over here, provide going downwards, the price line shot down, cut through all 3 moving average lines, then the moving average lines crosses over each other. So the first signal was the price line cuts through all three moving average lines. Then the last one is the crossover. That's when it's telling you it's definitely going that direction until further notice. And so and that at that point was at $170. So that was our sell signal, or it's a confirmed method to let us know it's downtrending. We could bet against the stock. We could start buying puts. So as it's downtrending, it has not provided us a confirmation that it was going up yet. It almost did right up here, like it was just about getting ready, and then something happened, and it just fell through. But we want to wait. We want to be patient. Sometimes we may get a little eager. If you do get eager, just don't go all in yet. Just buy certain amounts. You can start buying here, because the MACD was kind of telling us to. It was kind of providing us. Sometimes it provides us a pre-warning, a pre-signal of what it's going to do before it happens. But again, manipulation can be the enemy. It can affect things, and or news, and so that's what happened. And it just kind of, but as we're getting closer, well, now that we're going into the bullish season, this is going to be short-lived right here. It's definitely going to recover, and one of the things that makes a bullish season so bullish is that a lot of the tech companies come out with a lot of cool stuff. There's a lot of good, technology, conferences and those shows and stuff where they just go over everything, all the latest and greatest inventions. But also Apple, usually releases the new iPhone and this and that. Now, speaking about Apple, timing is always everything. You can see things are all on the bottom because things are priced very, very well. Now, Apple usually releases their iPhone sometime in the summertime, and they always but when a company reveals their date of when something's going to happen, that's usually when it triggers a trending direction. Like the stock will then start going up until they release it. Then usually the stock goes down, because the pros have the saying, buy on rumors, sell on news. So by the time the news is out, you want to sell because everybody else is, because the stock is going down. The price is already priced in high because it was already based that news was going to happen. And so that's why you always want to be holding before the news comes out. And so but Apple, so iPhones. So Apple's primary revenue is their iPhone. It's their bread and butter, is what I call it. Probably by 70% is their revenue comes from the iPhone. Just like vehicles, people are holding on to their cars longer than they used to. Same thing with phones. There used to be a day where every 2 years, whatever, there'd be a big long line at the front entrance of a cell phone place, because they always had to have the latest and greatest iPhone. Well, these things are more and more expensive, so people are just holding on to things a lot longer. Apple sees a decline in growth in the future, and they just built this huge mega facility, this huge office. And so when Elon Musk, for the longest time, Tesla was always on the verge of going bankrupt. And so, but he was always pulling some strings here and there, and it was just dodging bullets. And one day he met up with Tim Cook, the CEO of Apple, and he says, Tim, people love Tesla, people love Apple. Let's do something together that would benefit both of our companies and our customers. And Tim Cook was like, hell no, we're not getting in the car business. We sell phones. And then all of a sudden, the pandemic started happening, and there's just a bunch of things, and then they start sweating it. Well, in January 2021, Tim Cook announced to the public, well, guys, we're getting in the car business. And he also said that he wants to have this car out by 2024. So think about this. Wow. Apple's iPhone used to be their bread and butter. The iCar, or whatever they're going to call it, is most likely going to be their new bread and butter. But what happens when, like, let's say Elon Musk with Tesla reveals a Cybertruck or something, or like with Ford Motor Company revealing the Lightning or the Mach-E? when they reveal it and they take the orders or the reservations, when do the customers get it? In 2 years. What year is it this year? This is 2022. What year does Apple want to reveal this, or when does Apple want to deliver this car? 2024. That means that Apple has to reveal this car this year. They have to take these reservations. They have to manipulate their numbers. They have to manipulate the investors to believe that they have all these, or they don't have to build the car just yet. But they do have to build it, when the time comes. But they have to take these numbers and start showing how desirable that this is going to be and how much growth Apple's going to have, and their stock is going to surge like crazy. Yep. Now, if you've watched Apple's their reveals, I mean, they're pretty neat. They're pretty cool. You guys ever watched the one when they revealed the iPhone X?
Thank you.
So I believe this next iPhone reveal is going to be just like, or this new Apple event is going to be or the way that they revealed the iPhone X. It was all about the iPhone 8. So it was iPhone 8, the colors, we have the large, we got small, blah, blah, blah. They went over the iPad. They made it seem like that the show was over. But then all of a sudden they go, but wait, we have a surprise for you. The all new iPhone X. And I was like, that is awesome. But wait a minute, what happened to the iPhone 9? But either way, I believe that this is going to be a surprise, so be ready. There's no, rumors or anything yet, but I believe this is the rumor. The math just makes sense of how everything has happened with history, how it needs to happen. If they don't do it, they're crazy. But I mean, if I was the CEO of Apple, this is what exactly that I would do. It just makes sense. So,
I've heard about the Apple car. I heard at first they didn't want to, and then they decided to. I heard that. I read it somewhere.
Well, they've had some issues with engineers, a design team trying to design different looks and stuff. And the history with working with Apple has always been kind of a nightmare, because they've always been trying to push, especially with Steve Jobs, always trying to push, trying to, yes, you can do it. And the engineers are like, no, we can't do it quite like that. Yes, you can. And so they're always trying to push the impossible to make it possible. And so, but we've lost some engineers. They've had to hire some more, and designers and things. They're trying to perfect whatever that they're going to do. And hopefully it's going to be a crossover SUV, not so much a car, but at the same time, they have to make it affordable. They have to be able to compete. But Apple has a tremendous amount of a customer base versus like other companies like Rivian or Lucid. Apple has millions and millions of fans already that are ready to place a reservation, especially if Apple does a reservation for $100. Oh my gosh. I mean, this thing, they're going to manipulate these numbers like crazy. We'll have to see what happens, but the reservation fees used to be $500. And then Ford, with Tesla, they used to be $500. Then Ford decided to start and copy Elon Musk with these reveals. They did the Mach-E, they did a $500, and then Tesla did a $100 when they revealed the Cybertruck. And I was like, oh my gosh, can he just do that? He just did that. And, wow. And anybody has $100, and that just manipulated his stock like no other. And I was like, holy crap. I mean, this is fascinating and phenomenal, and they just keep doing it. And so we'll see more. But again, so my chart here is more designed for a shorter stuff. And when we try to pull, like, let's say this is the whole year right here, 2022. We have one signal, we have 2, 3, 4, 5, and almost 6. We have 5 signals all together within 1 year. And for a long-term investor, like I said, you probably don't want to have to go through all that, because it's kind of gone sideways. In actuality, it's really going to go up. So the way to try to avoid this amount of signals, if you're a long-term investor, is you need to go back to your indicator settings and from the time area, we'll have style. So that way we can now pick and choose longer times or shorter times. We can also change the colors if you want to personalize a little better, or maybe you're colorblind. You have a hard time seeing reds or whatever. You can change the colors for different things. And so now that we've changed this, you can see there's a lot less signals. There's a lot less crossovers. So there's one crossover here, and that was in May 9th of this year. The last crossover was when the economy, or when they closed down the economy in April of 2020. So that was basically saying, time to sell. Even the MACD kind of said it, but really said it right in the middle. And but then it provided a buy signal right there, right down there. Up until recently, then it said to provide, to sell for long-term investors, to sell right about that 160 area, because now it's at 130 area. But it'll soon provide a buy signal, and that's where you can really tell that for a long-term investor, if you're going to buy back in, your signal is probably going to be right around the probably 145, 150 area. And so that's where you're going to leave a lot of money on the table, because the timing is everything. We know that we're entering the bull season now. We know that Apple's going to have these events very soon. We know that the investors know that that's going to happen. They're going to start buying. They're going to start pumping this thing up. And so we just wait now for the right indication to buy and to hold until it says to sell. Now, if we're doing a daily thing, if we're going to, a day trade, again, the first hour and the last hour is the most volatile times of the day. So most of the time, you probably want to look at the 1 minute. It's best to utilize both the 1 minute and your 5 minute graphs together, all in one. When you're doing it on a desktop, we can do that very easily. Right here, your bars, which I don't use. I don't do the candles. It's just too distorted. But we can do it side by side if you wanted to, and it's actually recommended to, because especially when both sides are telling you the same thing, that's like a double confirmation. Hey, it's going up or going down. But for now, we have the 1 minute graph. The grayed area is the pre-market. The black areas are when the market is open. So we can see that during pre-market it went down, and it had done that from the economic reports and whatnot. And that's why we watch the economic reports, because they have such a big impact on the stock market. Now we can see that when the stock market opened, the first minute it shot up, and it provided us an uptrending indication that it comes down, but it's saying the price line is above the moving average lines. We buy calls at that, or if the stock market is up, we could either hold. We could just hold and wait. If you're straddling until the first indication, because if we're holding calls and puts, the price is now up, it's going down. We sell our call and hold our put. And the price comes down. We want to switch over, because now it's about probably past an hour. So we have 9:30 there. 10:30 is about right here. It's been about 1 hour. So after 1 hour, things start to chill out. We want to switch to the 5 minute, whether you're on a double screen or not. We want to kind of take a look at the both or the 5 minute, but we can kind of see now it's starting to range. It's kind of flat. It's not doing anything. So, but you want to, like I said, utilize the two. If by still looking at this after 1 hour, it starts to change its direction, you sell your put. And again, you can maximize your gains by doing this and minimizing your losses. Or sometimes you can turn your loss into a gain from whichever one is created the loss. So it just depends on your signals.
On a straddle, can you sell like when it goes, like we're talking about when it goes up, can you sell your calls and then sell your puts, or you don't have to at the same time, right?
Correct. That is absolutely correct. But it's best, and one of the reasons why it's best to try to buy your straddles maybe 10 minutes before close, because usually right about that 5 to 10 minutes before close, the price is usually, where it's going to be until it closes. I mean, it may go up or down a little bit more, but you've avoided all that time decay and depreciation all right here. This time decay could have been 5, maybe even 10%.
That's
if you were holding. So you sold here, you're done for the day. Okay, no more trade unless you're day trading. You get in, you get out. Do not hold through this period. Get in, get out, secure a little extra gains. You wait until here, or then you can day trade maybe again in that last hour, because like I said, the last hour is very volatile. But then within this point here, this is 10 minutes. This is 10 minutes right here. It's not going anywhere. Gone up, down a little bit, but not much. This is where we buy our straddles, an equal amount, preferably. Like let's say maybe $1,000 worth of calls on one hand, $1,000 worth of puts in the other hand.
Okay.
So the next morning, we wait until either the stock is up or down, and it all depends on the signals. So it says since the market is up, we sell what's profitable, secure our gains, and then minimize our losses. And it could be the other way around. Let me see if there's another one that's kind of the opposite. So right here, this was Thursday. The whole market was just down like crazy. So the market was down using the 5-minute chart. We're holding our calls and puts all the way down. Did not provide any signals to sell any of them yet. By this time, most likely your put has gained a substantial amount, that your puts are probably up 20 or 200%. Your calls may be down, 70%, but you're so far ahead. So now it's telling you here to sell your put, hold your call. And then over here, we can see the MACD starting to change. It's starting to kind of drop off here. We sell our call and get rid of it.
Okay, and just wash and repeat, right?
Yeah, it's the same thing based on the two signals. We get rid of it, then start over. As soon as it plunges here, we start buying here. Or if it's really down, maybe we can buy our calls, wait for the puts, because maybe it'll bounce. Maybe people will pump it up a little bit. We buy our calls, it comes up. We have a little bit of profit now going in overnight with our calls. We buy our puts are at zero gain, which is fine. And then whatever happens, the next day it goes up. So now we made more on our calls because they're higher. We sell those their calls, secure our gains, and then the puts go down, and then they're probably at a wash at this point, or maybe at a little bit of a loss. But your calls have exceeded your loss, and so and that's really the best way to do that. If you don't do it exactly like that, you're at risk of time decay or something. We have to apply everything that we've talked about today. The rules, such as the volume. If you pick a stock option to do this, it has no volume. It's not going to work out as well, because you're going to suffer a lot more time decay, or you're going to have trouble trying to sell it or buy it, because if there's no volume, there's no open interest, nobody wants it. It's like a store. You're a store owner, you have merchandise on the shelf, and you have no customers. You have no volume. If you don't have customers, nobody's going to buy anything from you. And so that's why it's important and key to have something, even if it's an individual call or put, there's got to be a decent amount of open interest and volume, because it'll maintain its value and minimize the decay. So hopefully that makes sense. Anybody else have any questions? Somebody in the chat room says, how do you draw support and resistance labels in the chart during the market, please? Thank you. Again, the moving averages is basically our support and resistance. Even when we're looking at the daily graph for Apple, right now the price line is below the support level. These are kind of like your support. This is kind of your resistance. If the price is above the moving average, it's going to provide you resistance. So that is just really, really key to utilize. Bullish Bear says, I missed some of the talk. How can I access the recording? So again, Bullish Bear, this is all recorded. As soon as we're done here, my computer is going to convert it. I'll upload it to YouTube. I'll share the link with you guys. That way it'll be available. We can watch it all the way from the beginning. Anybody else have any questions or comments? Otherwise, I think that is it. I do have one other thing. Again, practice makes perfect, you guys. If moving averages is new to you, as it was at a certain point to all of us. When I discovered moving averages, I knew I found gold. It's just a matter of now is just trying to utilize it. And when the stock market was open, it wasn't like a good time to practice. That was a time to make money, not to practice. It's like the Super Bowl. You don't practice during the Super Bowl.
Exactly.
And so how can you try to practice when it's not open? And so the best idea that I came up with was to learn to trade or to day trade cryptocurrency, because cryptocurrency is available 24/7. It never closes. It's open during the weekends. It's open during holidays, and it's not as volatile like the stock market when it has an open and a close. But it has no limitations. We have unlimited day trades with it at any account type that you have or dollar amount. We can utilize the 1 minute chart or the 5 minute chart. We can trade $1 if we wanted, or $10, $100. It doesn't matter. But we can practice it, and with real money, because real money has a psychological effect on you. It messes with your emotions, and that's one of the things you have to learn to control is your emotions, because your emotions may impact your buying and selling decisions in a bad way. We have to think statistically, analytically, and strategically. And the best way to practice is with cryptocurrency. You can just pick one. Bitcoin, it doesn't matter. You just put $10 in when it's telling you to buy it. Practice these signals, get in, get out. Practice the 1 minute, the 5 minute, do both. But you'll notice that your day trades are going to be probably like within every hour, every couple hours. Like just now, Bitcoin provided a buy signal on the 5 minute chart she's just an hour, a couple hours ago. And so it's you buy there, it's going to come up, wait until it provides you a sell signal, and you sell. And after so often, practice makes perfect. And you're like, oh, I got this. This is easy. What was I thinking? And then when you do this in the stock market, you own it. And you no longer need to practice anymore, because you've already put a lot of time, hours into it, and that helps build confidence, because the more confidence you have, the better trader and investor you're going to be.
Oh, wow. I am so wired.
So somebody said, can you tell for us when we should buy shop calls, please? And we should sell it. Okay. So we have two more, as we were mentioning earlier today, we have two more splits coming up. So if some of you guys are new, we've talked about splits with Amazon. Going to be very similar to Tesla and Apple. They all have the same characteristics, which helps us provide the same exact strategy and the play for each one. So typically when a company gives us news, hey, we're going to do a split, and usually it could be a month or several months when they reveal it. Now the stock may come down, or it may not really do anything, but it usually does maybe 1 to 2 weeks before the split. All of a sudden there's a lot of activity. The stock is trending upwards up until the day up until right before the split. And it could keep going up right before, or maybe the second day before. If it's the day before, it may kind of hesitate, But that's usually because a lot of people are selling, trying to get rid of, because they don't want to hold through the split, especially with stock options, because we ride the wave up until the day before the split. We don't hold anything through the split. If you hold a call or a put, it's going to get crushed, because of the implied volatility crush will devalue both sides. It just does that because the whole system has been cut. It's been split. It's just weird how it works, but just know that's just how it works. So the best idea is to after the split, you start buying calls because people are selling. They're securing their gains. They're securing their profits for the next 2 weeks. Then after that, then the stock begins to stabilize. So, and I'll show you watching, Amazon, which didn't really have, because of everything going on in the economy. When they announced it, it just didn't really do a whole lot up until about 2 weeks before the split, and then when it splits, then it goes. It went from almost 125, 126 or so down to about 102. And I had posted that weeks before that this was going to happen. I warned everybody that this was going to happen, and it did happen. And I predicted it was going to reach about 103, and it did reach around 102 to 103. Did exactly. I did the math. Because after the split, it always goes down 20%. So whatever it ends up being minus 20%, it was 103, and boom, it just did it just like clockwork. And so after it reaches that point, that's basically going to be kind of our buying point to buy back in, because we rode calls for the last two puts. We rode calls, or not calls, puts. We rode puts all the way down until it finally reached that. Now it's starting to focus on calls, because now it's going to try to recover and do its thing for this summer, for the next 3 months or so. Now Shopify is going to do the same thing. So let's see where Shop is, and what's the other one? Google. So this is our daily graph for Shopify. So it just hasn't really done anything yet, but it should this week. So when's the split for Shopify? I think it's next week, isn't it? Tuesday. Let me switch browsers here. I think it's Tuesday next week. I can't go shop. Split date. June 22nd. Is it tomorrow? Or no, not tomorrow. This Wednesday. Everyone who holds Shop will stock will receive that. Okay, wait, hold on. 28th. Okay. So the 28th. Yeah, it's weird. Everybody's all, this Reuters. Everyone holds Shop stock on June 22nd. Will receive their additional shares on June 28th. Make it seem like, you gotta hold it, because if you do, it's going to go down 20%. I mean, you really want to hold it and have it go down 20%? Heck no. They're just trying to trick people. And so the 28th, is definitely next week on Tuesday. So this will give us all for the next 5 trading days to focus on calls on Shopify. So this stock should definitely every day should pretty much go up. Just not sure how far. I mean, this thing is, it's done terrible throughout its earnings. It seems like every earnings it's missed, and just causes it to plunge. But they have to do something. In order to get different results, you have to try something different. If you keep doing the same thing, you're going to get the same results. And that's why Shopify is trying to do something to kind of boost up their market cap. And because they're doing something different, they're trying to become more affordable for especially long-term investors. And so, but we should be focusing on calls on Shop all week for the next 5 trading days up until Monday next week. Get out of everything of Shopify. do not hold through that. And on Tuesday, when it does split, then we can start focusing on puts, because most likely as the rest of the market's going up, Shopify is going to be going down until it reaches about 20%, whatever that is. When we get closer to that date, we'll have to do a little bit of math and figure out what these numbers are going to be, and that way we know what it's going to reach. And that way, when it does reach that, now we can start focusing on calls for the rest of the summer. And then same thing with Google, though I think Google split is next month, so it's a little too early. But as we're in the summer season, but the bullish season as well, it wouldn't be a bad idea. Well, because it's not a bad idea to really get it in anything, because everything's going to just start recovering. It's going to be a really hard time for the bears to keep the market down in the bull season. Any questions? Anything else anybody wanted to go over, or are we it? Everything else makes sense? If you don't have any questions, everything makes sense. Awesome. All right, guys. Well, we'll wrap this up. I will upload the video to our YouTube channel here in a few hours, and I'll post it in our chat room. Thank you guys very much. Hopefully you guys learned a lot. 'Cause remember, the more you learn, the more you'll earn. We'll see you next week.